We're diving into the institutional framework for XRP, and more importantly, a critical breakout signal that is pointing squarely at 2026.
Look, the window for early institutional positioning on ISO 2022, that's the new global standard for financial messaging, well, that window is closing fast. The opportunity cost for not acting is getting bigger every single day as the major players lock in their spots. And you know, while most retail investors are completely distracted by this sideways price action, the Federal Reserve has quietly released some critical integration data, and it's pointing to the next major liquidity shift.
So in this breakdown, we're going to walk through the official timelines. You can see exactly how to position yourself right alongside that institutional capital as this new market structure takes shape.
Okay, point number one, the macro liquidity signal. While everyone's watching XRP just kind of chop around, the traditional stock market just flashed the big risk-on signal we have all been waiting for. The Russell 2000, which, tracks small-cap stocks, just hit a brand new all-time high. This is what the calm before the storm looks like. The risk appetite is flowing back into the market, and you better believe digital assets are next in line.
So why does this matter for crypto? It's simple, really. It's because small caps lead the liquidity cycle. When Wall Street starts getting aggressive with these small cap stocks, the next predictable move, it always happens, is a rotation into higher risk assets, like altcoins.
Institutional updates move fast. Go ahead and subscribe and hit the bell to make sure you get this research before the rest of the market reacts. All right, point number two, the dominance trigger. Let's look at the specific technical trigger that's going to signal the start of capital rotation within the digital asset market itself.
So, Bitcoin dominance, which is just a measure of Bitcoin's slice of the total crypto market pie, is sitting at a critical support level right now, 58.94%. This has been a major liquidity floor going all the way back to July, and if it breaks below this, well, that signals a huge shift.
The second that floor breaks, we fully expect liquidity to pour out of Bitcoin, first into Ethereum, and then just cascade right down into high-utility altcoins like XRP. And we're already seeing the first cracks forming. I mean, look at this. Ethereum is up 7% this past week, while Bitcoin is totally flat. The rotation has already started.
And that brings us to point number three, the institutional lockup. This right here, this is the confirmation that the big money isn't waiting for the breakout. They are accumulating right now. On-chain data is confirming it. We're seeing firms like Canary and Bitwise quietly locking up massive, and I mean massive amounts of XRP. We're talking to the tune of 800 million, all while the price is doing nothing on retail exchanges. This is textbook institutional accumulation.
Video editing takes time, but the market doesn't wait. For immediate updates on institutional holdings and breaking news the moment it happens, join the Telegram newsfeed using the QR code on your screen. That's where the raw data gets posted first.
And finally, point number four, the price targets. Let's actually translate all these liquidity signals and institutional inflows into a realistic framework for price discovery as we head into 2026. So what we're seeing right now is a market structure of pure consolidation. We are building a really strong base of support around that $2 mark, and that is absolutely critical for the next major leg up. Now, based on the ETF inflows we're observing and the timing of this 2026 liquidity cycle, the next conservative target is somewhere between $5 and $7. The max bull target for this cycle, if we see full-blown institutional adoption, is between $10 and $15. Don't let this current consolidation phase shake you out before that Russell 2000 liquidity hits your allocation. But I know what you're thinking. What about all those headlines reporting institutional ETF outflows? It's a fair question, and it's a crucial point of confusion that we need to clear up.
Because the official ETF data, it tells a very different story than the headlines. I break down the Canary Capital filing and the truth about what the institutions are really buying in this deep dive right here. There is a third indicator flashing green. Click on this and I'll show you what it is.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.